Welcome, ladies and gentlemen, to realestateinvestormba.com. At Real Estate Investor MBA, we strive to provide valuable information from various experts within the business and real estate community, covering real-time market and economic information as well as curriculum-level material within various real estate investing niches. We aim to be relevant, straightforward, and forthcoming with actionable information for our community. And here's your hosts, Tejas Gosai and Jeremy Moyer. Hello, ladies and gentlemen. Welcome back to your favorite real estate podcast. It's Real Estate Investor MBA. Check out our website. We're on Google Play, iTunes, Spotify, iHeartRadio, all over, and we have a ton of support from the community here in the Lehigh Valley. And what's awesome is Jeremy has been getting some great guests, and today we have Rodney here. So welcome to the program. Jeremy, take it off.
Absolutely. So I'm excited to announce our guest today. As Tejas mentioned, Rodney Thompson is with us. Rodney is with Solaris Capital Management. Rodney started out in single-family housing rentals and moved into multifamily after discovering the scalability of multifamily, and currently has 176 units under management. Rodney has been in IT industry for 30 years. In the last 20 years, Rodney has been in IT administration, design, data security, been responsible for multi-city networks and project management, overseeing design and implementation, setting budgets, maintaining project costs within budget. Rodney has a Bachelor's of Science in Technical Business Management from DeVry University. He's married to his wife, Pattie, for 35 years and has 6 awesome kids. Rodney, thank you so much for joining us today. Can you just tell the listeners a little bit more about yourself and how you got started in real estate?
Absolutely. We have been wanting to get into real estate for years, and it was always one of those things. It's like you say you're going to wait until you have enough money, and my wife really wanted to be in self-storage, and self-storage is an awesome asset class. And the thing that we were seeing is that we didn't know how we would come up with a down payment, and so we put it off and we put it off. And we were talking to a friend of mine at where I work, which is Winona State University, and at that point we had some single family houses, and I was really looking to do the Burr method. A lot of people have heard that with bigger pockets, and that was kind of that was going to be our strategy. And I got to listening to Bigger Pockets and a few other podcasts and discovered multifamily. And multifamily with the scalability and the forced appreciation just made tons of sense. And so I started going after multifamily properties. And I also knew that I needed to get coaching. If I wanted to move at a faster pace, I knew I needed some coaching. And so I started seeking out some coaching, joined a coaching program, and everybody that I had spoke to, in a lot of places you hear it takes about a year to get your first deal. And I wanted to be a bit more ambitious than that. And so I set a goal of 6 months to get my first deal. And that's what I did. I made it in 6 months. We got our first deal. We didn't close in 6 months, but I had it nailed down, and the closing was set for a few months after that. And it involved getting up very early in the morning, because it was the only time that I had. It was the time that I could claim for myself, was to get up early in the morning and work on brokers, analyze deals, and I could do about a half a day's work before I even went to work in my W-2. And so that's our journey so far. And now that I have a deal under my belt, and I say now, it's been a while since we closed on that deal, and then of course everybody knows the Corona hit, and that really put the brakes on a lot of stuff. And but we can talk about that. You guys know about how it seemed like it was going to really screw up the market, and a lot of people pulled out. A lot of people quit investing money, and but we didn't see anything happen with pricing. The pricing of the multifamily properties didn't really take a hit, and so then it turned into really a funding game.
That's a great story, and it's awesome to hear how you got to be where you are now. You mentioned coaching and things like that. So when you say that, do you mean like bankers, financial advisors, or what? How did you get the knowledge?
Well, I got the knowledge the way a lot of people do. You do the rich dad, poor dad route, read books, did lots of podcasts. I just sucked in as many podcasts as I could. It was nice because I had about a 30-minute ride every morning and every night to and from work. So it was easy to listen to a lot of podcasts. That kind of leads me to real estate, at least syndication as a whole. I have met so many different people in syndication, whether it's with a group or whether it's in LinkedIn contacts, which is how Jeremy and I met, or any of the other means of networking. And this is a unique business because not too many businesses are such that everybody has a very abundant mindset. They're not out for just themselves. And if you need help or suggestion, everybody is willing to lend a hand. And that is the one thing that just really has confirmed why I should be in this business.
Absolutely. I definitely can appreciate what you're saying. And, it definitely takes a team to get across the finish line, some of these deals, right? All the different work that's involved, and that's kind of going in a direction I want to take the interview here. This 176 units, I believe you mentioned before we started, it was one property that consists of all these. I really want to know, I bet the listeners want to know, like, how'd you find it? Was it off market? Was it with a broker? Or was it listed? What to buy it for? Is there a value add component of rehab that you had to do? How long did it take? Refinance? Just some of the numbers, just so we can kind of get an idea.
The property was listed with a broker, and I got an email in my mailbox just like everybody else did. It wasn't an off market deal. In fact, another guy in our group had looked at this property and thought that it wouldn't pencil. And when I got to it, it actually worked out. And then that guy actually ended up working with us on the deal, the guy that originally looked at it. And we paid 11.4 million for it. And after this, I tell you what, if you are going to purchase a property, find one that's going to give you the most grief, because the next one is going to be easy compared to that one. And this property, now, when I say give you the most grief, I mean, I've talked to people that have had, oh, wow, I didn't realize I was going to have to replace that. And we really didn't have any gotchas on this one. The biggest thing on this one, it was a $3.4 million raise, and it was an REO. And that means it was with the bank. It was a foreclosure. It was with Fannie, and the previous owners, I think, got in over their head, and they just returned the keys. So it was a friendly surrender. But the thing is that it was at it had to be disposed of in 2019, and there were no extensions. Normally, when you buy a property, you build some extensions into your contract so that if you have a hard time closing or you're not really quite meeting your deadlines, you can get an extension. But there was no extensions with this, so we were on a hard close, and that made things really interesting because it was at the end of the year. Our group had probably 10 deals going on at the same time. And boy, I tell you what, if I had to do anything over again, I would not close at the end of the year. People are not in the frame of mind. It's the holidays, and they have their brain is somewhere else. And so raising capital was a challenge. It was a big challenge. And we got down to 2 weeks before closing. We were still $1.2 million shy of closing, have enough money to close. Yeah. So it was a nail biter.
Wow.
And when you have the SEC attorney and your mortgage broker chomping at the bit and biting their nails, you know that you're down to the wire. But everybody got on the phones, and we were actually able to raise some capital, the capital we needed to close the deal, and got it closed. And this is where that kind of deal really does good, because it makes you work together as a team. And I don't know about you guys, but performing under pressure always seems to be better, because there's a big fire lit under your butt, right? And having the reputation in the industry of being able to close the deal is huge, because if you ever don't close a deal, brokers don't want to deal with you. You're just getting a bad reputation for not being able to close a deal. And can you ever live that down? Probably so. But
I'm in the real estate world. Yep, all the time. It's crazy.
Yeah.
I will admit, though, a lot of people that we have worked with that haven't closed on a deal, it's great that we don't treat them poorly, because they really do eventually close the deal. Like,
yeah.
If you just stick with people like that want to get into this business, they find it, one way, shape, or form. And if you can really work with them. I have to ask you something, though, because I think you glanced over something. When you said SEC, does that mean you guys had like a private placement memorandum or some type of vehicle that did this investment?
Yes.
Or can I?
Yeah, it was a 506B deal. So that's the SEC's section that displays, or that describes private placement memorandums. And so if for your listeners' benefit, 506B you can't advertise, and 506C you can't advertise, but you have to have accredited third-party verified investors in the 506C. 506B, they can self-certify, and you can have up to 35 non-accredited or sophisticated investors. And it's, I don't know, I always kind of thought of a couple of different ways. It's like, wow, it'd just be great to advertise, right? Just put it on Facebook and run with it. Put a billboard up, whatever you want to do. But at the same time, I'm not accredited, which means I couldn't invest in my own deal if I wanted to. And 506B, you can get like one of the guys with us on the deal. He did sub-syndication, and he had done a lot of single family stuff on his own before, and he knew that all of his investors were more in the 25K area. And since our minimum investment was 75K, he just did sub-syndication and got a bunch of his people together and raised 150 grand. And then they went in on that as a single share. So there's creative ways to do it. But yeah, that's the route that we took.
Awesome.
That makes sense, Rodney. I can appreciate the capital raise and the SEC. I know Pages, they're raising money right now in an evergreen. I think it's a Reg D fund.
Yeah,
Pages? Yeah.
Lehigh Valley Private Equity Fund. It's a Regulation D fund. We can advertise. We haven't started. We're starting now. But yeah, sorry. Go ahead, Jeremy. Thanks for that.
So I wanted to kind of pick your brain, Rodney, on these conversations for deals right now with investors, with everything with COVID, and I know some conversations I've had with investors on different deals and just different situations. Is there some are a little squeamish, or some are still gung ho on the marketplace? And I just want to get your opinion and your perspective on the type of conversations with any current deals that you're looking at with investors. If you're trying to raise any funds for anything, are you presenting things differently? Just some insight there.
You know, uh, I some of the deals that started when the whole COVID thing took off, to be honest with you, I mean, and I'm not trying to be unfair or mock anybody, but I did have to kind of laugh a little bit with this whole COVID resistant property. But uh, I'm not doing anything different as far as my presentation. I think that the the attitude that um, and you guys probably know this too. You're not out trying to sell somebody something. You're presenting them with an opportunity, and will you possibly have to explain how things work? Sure, but you're not selling cars. You're presenting an opportunity for somebody to invest in, and most people that are looking for an investment, they know what they know that they're wanting to invest, and not they're not out. Do you run across people that kick tires? Yeah, I do, but um, really the only challenge that we've had is there's lending restrictions as far as reserves, but the um, the value add component that is there on the deal, I think is still as strong. Now, do you? I think that being conservative and dialing back on maybe where you would have uh, let's say a 7 to 8% increase the first couple of years and then level off at a 2% per year is a bit aggressive right now, whereas that would be a little on the conservative side before COVID. I think it's aggressive. There are a lot of people that are underwriting for zero rent growth and zero organic rent growth. I haven't seen that all that much because our property is is really doing well. We Our collections are up. All of our renovated units that are coming online are coming on at the expected increase in rent, and people are gladly renting them. And so I'm not seeing a lot of the horrific expectations that were originally predicted when this whole thing started, which is good. That's great.
I agree. We're seeing similar things across our portfolios. What market are you in? I forgot to ask.
Montgomery, Alabama,
All right.
and we're looking across the southeast, Little Rock, Arkansas, Tulsa, Oklahoma City, Jackson, Mississippi, and Atlanta, Georgia. And there's lots of deals. I have lots of deals coming across my desk, but do all of them meet our criteria and pencil out? No, they don't, and that's normal in any environment. I think it's a little more challenging because I right now a lot of the owners have seen that collections are staying high and they're holding their prices high, and there are people out there paying those prices. I don't think it's necessarily good business at this point. So we're really holding off and trying to be conservative and looking for the deal that has lots of room in it.
Makes sense. So I'm going to start asking. I thought of this question right before we started. I think I'm going to start incorporating this in all the different interviews going forward. But Rodney, what would you consider like your superpower? That you are when it comes to investing. Like, what are you just top level at that you feel you bring a lot of value into like any type of partnership?
I think it's relationships. I don't really know a stranger, and I like talking to people. I can um, I can analyze a deal and I know what to look for. It's not something that I like to do. Spreadsheets are very tedious to me, and I don't know if it's I have a short attention span or if it's just that administrative work. I suck at it. Well, let me rephrase it. I suck at it because I don't like doing it, but I'm good at it. In other words, I can sit down uh, at a deal that's done and look over the analyzer, and like I had somebody send me one here a couple of weeks ago, and I think I sent him back 13 to 15 questions about the property based strictly on the analyzer. I hadn't even seen OM or anything, but I I could see in his underwriting there were things that brought up questions, and that that comes from doing a boatload of analyzing. And I think that if you're going to be talking to an investor about a deal, you need to understand the underwriting. And it may not be the thing that you do, it may not be your superpower, it may not be what you're good at, but you need to know it. And if you don't know it, I don't see how you can present a deal properly, because you have to know it's a good deal. You have to know that the numbers are coming in and why they're coming in, and if they are a particular way, why they're that particular way, and be able to explain that to the investor. You can't just say it's a great deal, put your money in. That doesn't work. I wish it did. That would be awesome, but but it doesn't. But yeah, I guess that would be my superpower. Would be relationships. I think they're important. This is a relationship business. It's a team sport, like you said before, and it's a relationship business. If you don't have the relationship, people don't buy, they don't invest based on that it's the apartment building is the right color. Uh, there there are numbers that present themselves, and those speak for themselves. But I would have to say that if you presented a deal to somebody, and that somebody, and it was a smoking deal, but that somebody didn't like you, they're not going to fork over their cash. They're just not. And I think that relationship building is very critical in this business.
Rodney, we're at 25 minutes, and then we get yelled at for having too long of a show. We could talk to you all
Well, it
day.
depends on how awesome of a guest you have, right?
It does. But like, we got to have you back on, because that's a big thing here. Like, one thing I want to take away from this interview is, you said we're not selling cars. We're not like, I mean, this is real estate, right? Like, this is
Yeah.
from somebody who went to law school. When you own the real estate, you own it down to the core of the earth, and you have airspace. Like, this is God's work, is what I think it is.
Yeah.
And the relationship
Exactly.
part is the best part, like, hands down. I think you're actually, Jeremy, correct me, the first person that we've had on that, somehow you guys reached out to each other, and, it's really awesome that this could happen. So with that, this is a great program. We love what we do here. Please support us. And Jeremy, you
Absolutely.
So in closing, Rodney, like, how can people get a hold of you? Social media, Yeah.
Social media. I am on Facebook, but I can tell you, I'm just going to copy what I put on LinkedIn over to Facebook. I know that sounds trite, but I don't spend a lot of time on Facebook, and maybe I'm in error not doing that. But I am on LinkedIn quite a bit. You can find me on LinkedIn. You can send me an email, which is I have my address, my email address in my LinkedIn profile, and my phone number if you want to call me. And then you can get to me through my website, which is solariscm.com.
Can you spell that?
Yes, it's SOLARIS. C as in cat or capital, and M as in management. So Solaris Capital Management, Solaris CM. It's just like Polaris, the snowmobile and the ATVs, and I think there's a star, right? It's called Polaris.
Yes.
But it's Solaris, which means of the sun, actually. So SolarisCM.com. That was probably more than you were asking for. But
It's great. You're thorough.
Yes.
Exactly. Well, you guys, I really appreciate the invitation to come on your show, and I'd like to return the favor sometime. And
Yeah,
let's talk again.
definitely. You are excellent. This is Real Estate Investor MBA. Check us out at realestateinvestormba.com. And Jeremy, can you talk about, I don't know all the places we're syndicating now and where we are, but
Sure.
the outro.
Yeah, so we come check us out on iTunes. I think it's Stitcher, Spotify, Google Podcasts, and TuneIn, and iHeartRadio. We post often on our Facebook page, also on our LinkedIn page. We're pretty active, so come check us out if you like what we're doing. Give us a good 5-star review. Let us reach out to more people. So again, Rodney, appreciate it. Thank you so much.
Absolutely. Have a great day, gentlemen.
Thanks. We'll talk to you soon.